So continuing on after we've talked about the primary core concepts and principles that are behind Zakat, let's jump right into our assets. By that we mean our income, our earnings, and our gains on those. Now, a bit of this we've alluded to, but I think that this one page is a great shorthand for you to kind of understand what is included and not included in Zakat liable assets. Non-liable assets include things like personal effects. And we mentioned earlier that if you are a business owner, your hard assets in your business are to your business like your personal effects are to your home, to your personal wealth. So just as you pay Zakat on the cash in your home and your safe at home, or in your sock drawer, more likely, you would pay cash on what's controlled, what's kept in your business. So the liquid assets are what is liable for Zakat. Also not liable for Zakat is uncollectible debt. And that is debt which either the person is unable to pay, unwilling to pay, or has not been recorded. And we have a little bit more about debt later on. We mentioned about lost, frozen, or inaccessible wealth. You can pay on that when you have access, and then it becomes part of your assets and you pay on it yearly. And then illiquid wealth is similar. So what is liable for Zakat? There are essentially 5 things, or four chief things that you would pay Zakat on. Number 1 is gold and silver, and those things that are like gold and silver, meaning cash or cash equivalents. So those things that are used as currency, used as the medium of exchange and the store of value, is going to be liable for Zakat. So if you own gold, or you own silver, or you own dollars, or you own Bitcoin, all of those things are considered to be the same, and you owe Zakat on them. Similar to that are liquid securities, meaning that stocks and similar that you own, and that you can sell in the market for the same as cash. Liquid means that you can liquidate it, you can sell it quickly and get cash from it. We mentioned business inventory the same way, and gentleman earlier mentioned a very important distinction between, say, raw materials and inventory that is presented for sale. We'll talk a little bit more about some of the stipulations for that in a moment. Debt that you can collect on is also included in your assets. So if I say to you, hey, I remember the $500 that I owe you, you say, sure, I remember that. Well, I can give it to you anytime that you want. No, just keep it with you. I'll pick it up. Now, it's gone from being a debt that I owe you to a payable debt that I'm holding for you. It becomes an amana, becomes a trust that I'm holding for you because I can pay it and you're not willing to take it. So do you include debts that can be paid but have not been collected yet into your assets? Yes, you do. Why? Because you have the ability to collect them. Also, livestock and agriculture. I have only ever spoken to one community in the entire United States where people actually owned livestock. Surprisingly, it was not in Texas. It was in Minnesota. And so, if you own livestock, meaning that you have animals that are grazing, and you will pay Zakat on those animals on a per head basis. So sheep, goat, cows, camels, they're all paid on a per head basis. All other animals, if you raise them, may be liable as business inventory, right? Because you raise them and you sell them. But they would not be treated on a per head basis because they're not grazing animals. So this is specific to grazing animals. If you need those details, I will be happy to provide them. As I said, I've only had to provide them once ever in the United States, and no other time. Agriculture, similarly. If you are producing crops, there are certain types of crops that are liable, generally those that can be dried and stored, and there are certain crops that are not liable, and those are things that are, say, like, herbs and fresh vegetables that go bad. They're not storable, and they can't be held for a very long time. Again, that's the difference between making money off of that and then paying the zakat on the money that you receive versus actually giving zakat from the animals or the crops that you're raising. And we won't be going into that today. All of the above you pay on yearly. What are the liabilities? Liabilities are things like if I pay taxes, or if I have a mortgage or rent, if I have an insurance premium that I have to pay every month, if I pay utilities, or I have living expenses that are due every month, if I have debts that I owe, those are liabilities that must be paid before my zakat is paid. Now, how do I deduct these amounts? I deduct the most recent amount, meaning that if I pay my bill monthly, I deduct 1 month. If I pay my bill quarterly, I deduct 1 quarter, right? Or 1 quarter. Which one? 1 quarter. 3. If I pay my bill bi-yearly, I deduct half a year. If I pay my bill yearly, I deduct a year. And that's if it's due at the time that I'm paying my zakat. So let's say, for example, I pay my property tax all together at the same time that I pay my zakat, and it coincides with the time that I pay my zakat, then I can deduct the whole property tax and then pay after having deducted it. If I wanted to do the opposite, like the sister asked earlier, certainly can. Right? Meaning that include it, pay zakat, then pay the property tax, certainly can do that. Okay, haram income, haram earnings. These are things like interest on savings accounts, interest on tax returns, interest from bonds or annuities, or the profit from the sale of an impermissible item or impermissible service. Any money that I make, I have to give away to purify my wealth without the expectation of reward. And this is the difference between money that you give away as zakat and money that you give away as purification, or as tathir as they call it in Arabic. Money that you give away as zakat is you're giving it away with the expectation of reward. Why? Because it was from the halal earnings that maybe you made a mistake or a minor sin, but the way that you earned the wealth was legitimate in general. But when you make something from purely haram means, then you have to give away the gains from that without the expectation of the reward. Giving that money away is the way that you would purify or repent from that sin. The Prophet ﷺ said in the hadith of Abu Hurairah, إِذَا أَدَّيْتَ زَكَاةَ مَالِكَ فَقَدْ قَضَيْتَ مَا عَلَيْكَ. If you have paid the zakat of your wealth, then you have given what is upon you. وَمَنْ جَمَعَ مَالًا حَرَامًا ثُمَّ تَصَدَّقَ بِهِ لَمْ يَكُنْ لَهُ فِيهِ أَجْرٌ وَكَانَ إِصْرُهُ عَلَيْهِ. And whoever gathers haram wealth, then he must give it away in charity, and he will have no reward for doing so, and the sin of that would be upon him. So a person has to be very conscious about the wealth that they earn and the wealth that they spend on themselves. So let's talk about gold and silver and jewelry, since this is the basis that, of the Nisab, the minimum amount, is kind of pegged to and is used for determining the amount of wealth that we have to have in order to be liable for zakat. So the Nisab is the minimum that you must have to be liable to pay zakat. So how do we know the Nisab of gold? Well, the Prophet ﷺ told us that the Nisab of gold is 20 dinar. And earlier we mentioned that the dinar is approximated to about 2.245 grams of gold, making the minimum amount of gold to have 85 grams of gold. That also means that we would take that 85 grams of gold and we would multiply it by the daily amount or the daily price of gold, and that would give us the nisab of gold. If you want a calculator for doing so, you can go to my website. It's joebradford.net/NISAB. It's a very simple calculator. It pulls the live gold and silver prices for the day and calculates the nisab for you. The nisab of silver, the Prophet ﷺ mentioned that for every 200 dirham that one person owns, then they must pay one-fourth of 1/10, essentially 2.5% on that. So if we talk about 200 dirhams, and we mentioned the weightage before, that comes up to about 595 grams of gold. Okay, so just from these pictures, and this is an exercise for everybody watching, how much gold do you think is in this picture and how much silver? So yes, there are gold bangles on the right and silver bangles on the left. How much gold do you think is in the gold bangles, and how much silver do you think is in the silver bangles? Estimate. Because this is a number one thing. Well, I have gold at home, I just don't know how much it is. So I want to give you a visual in your mind right now so that you understand what you're seeing. Maybe 20 grams. So this is the gold, and this is the silver, right? So how many pieces of gold bangles are there? There's 6 there, right? And how many of the silver? 4. Okay. So you said how many grams of gold is that? You said 20 grams? 20 grams per piece. Okay. And what about the silver? 50. What do you guys say? The men are over here going, no idea.
You only pay.
Yeah.
I think it's less. Whatever you said is less.
It's less. Somebody online said 50 grams. Any other estimates? Now I want to put you onto one thing, and that is gold is denser than silver. So there can be a smaller amount of gold, but it actually weighs more than the same volume of silver. What do you guys say then? No idea? Okay. So there's 4 pieces of gold bangles. There's 4 pieces of silver bangles. Gold and silver is judged in percentages or carats of pure gold or silver weight. That's an important thing. Gold is generally weighed in carats, 24 carat, 22 carat, 18 carat, 14 carat, so on and so forth. Where do we get the word carat from? Remember earlier I told you guys about the carob seed, the kharub? Yes. So the word carat in the English comes from the Arabic word kharub, which was the carob seed used for weighing gold and silver and other diminutive weights. Silver, however, is generally mentioned in forms of grades, and many times that can either be represented by a percentage. This silver is 92.5% silver, meaning that a little bit of alloy is added to make it harder. But the pure silver weight there is 92.5%. Generally, you'll find silver, it's stamped on the inside of the silver, what the grade of that silver is. Gold will not be all the time. You can tell by looking at it. You can also tell by dropping it or clinking it against itself. So solid gold actually will not make a sound. So we all know Surah An-Nas, right? What does Allah subhanahu wa ta'ala say about the whispers of shaitan? What does he call it? الذي yuwaswisu. So this verb, yuwaswisu, is not used for whispers originally in the Arabic language. It's used for the sound of gold bangles when they clank against each other when a woman raises her hand up or puts it down. Because when you have real gold bangles, they sound like this. Doesn't make a sound. Because the density, right, doesn't allow for reverberation of the sound. So if you want to test gold and it clanks, it makes a big old sound, this is fake, definitely. So ladies, wedding gift, that first night, if it clanks, you may need to renegotiate. Okay, so these are 4 pieces. They're about 2.6. The inner diameter is about 2 1/4 inches, and there's about 41 grams in each of these silver bangles. So that is a total of 164 grams. Okay. So if you had 3 times that much if you had 3 times of what is in the picture, you would owe zakat on it, because we said 595 grams, approximately, right? Whereas the gold, you'll be surprised, the 6 pieces of gold here, the 2 outer bangles are 8 millimeters wide. The 4 inner bangles are 4 millimeters wide. Okay? And there are approximately 62 grams of gold in the smaller ones and double that in the bigger ones. So you're looking at, this is 22 karat gold, by the way. So you're looking at upwards of 600 to 700 grams of gold just in bangles. So if you have an armful of bangles and you know that it's real gold, the next step is find out what grade of gold is. Because if it's 14, it's going to be different than being 24. 24 generally won't be bangles because 24 is very supple and can be bent, but it might be 22. Regardless, you want to think to yourself, okay, if I have anywhere between 6 to 8 gold bangles, I might have enough gold for the nisab, right? If I have anywhere from 8 to 10 silver bangles, I might have enough for nisab. So it's just an approximation. Also, and I found this out that you can do, is that if you have a piece of gold, you can take the gold, put it on a blank white or blank black background, and then place something of standard weight and height and size next to it, like a quarter, right? Or let's say, for example, a bottle cap or a spoon from your kitchen, and then upload it to ChatGPT, and then say, analyze this photo and tell me the estimated weight of gold in this picture, and use as a reference the quarter, and they'll say, okay, well, the quarter, standard quarter is this height and this weight and this round, and next to the gold it'll do, and I've done it. So it's really, I did that, and then one of my family members brought out an actual scale and we weighed it, and so it came out to be almost exact, right? So that if a sister says, I don't know where to take it, and I'm afraid to go to a gold place, and then they start trying to, offer me to buy the gold and stuff like that, I want to deal with that, then that's a good way to make an estimate. Okay, do I pay zakat on gold and silver? If you own gold and silver bars, then yes, you include them in your assets, because the only reason you would own gold or silver bars is for their value that you're holding for a long time. And you might say, but I'm investing in them. Shouldn't I pay less? No, because anything that is liquid is paid on in its entirety, right? And this question comes up a lot when people ask about cryptocurrencies. But I'm invested in Bitcoin. No, you're holding Bitcoin. You might be looking for the price to increase over time, but that's not an active investment. That's not like being part of a stock, owning a share, being part of a company. So there's a difference between what you just buy and hold of value in currency and that you buy and hold of a company that makes money over time. If it's jewelry, however, there are 2 positions on jewelry. One position says, include all gold and silver, even if it's jewelry. And the other says, if you wear it regularly, then we consider it a personal effect, and you can exclude it. Personally, I take the first opinion, and that is that all gold and silver must be included, regardless of whether it is jewelry or not. And that is for a number of reasons. Number one is that there are several ahadith from Salama and Aisha radiallahu anha and others that women wore jewelry in front of the Prophet sallallahu alaihi wasallam, and he asked them if they had paid zakat on it or not. And when one woman said, I had not paid zakat on it, he said, "Hiya hasbuki min an-nar." That is enough of the hellfire for you. So she took off the bangle and she gave it away and sold it immediately. There's also the general hadith of Abu Hurairah radiallahu anhu that's found in Sahih Muslim. ما من صاحب ذهب ولا فضة لا يؤدي زكاتهما إلا أحميت له في نار جهنم فتكوى بها جنبه وجبهته وجبينه في يوم كان مقداره 50,000 سنة ثم ينظر سبيله إما إلى الجنة وإما إلى النار. The long hadith about those who do not pay zakat on the Day of Judgment. The hadith of Abu Hurairah in Muslim that the Prophet ﷺ said, there is never a person who owns gold or silver and does not pay zakat on that, except that it will be heated for them in the fires of hell, and then used to brandish their brows, their forehead, and their sides on a day that is 50,000 years in length. Then their path shall be decided, either to heaven or to hell. And then the hadith goes on to talk about those who don't pay zakat on their livestock and other forms. So, not paying zakat, because the principle in Islam is a very important principle. How do we know the difference between a major sin and a minor sin in Islam? A major sin is that which there is a punishment for in this life or the next. And a minor sin is a sin that has been has been denounced, but there's not a specific punishment that is mentioned about it. So in this hadith, not paying one's zakat on gold and silver is mentioned as being a major sin. Why? Because there's a specific punishment for it on the Day of Judgment. Therefore, even if a person says, well, some scholars have held the second opinion that if you wear it regularly, you can exclude it, I would encourage you that if you have the ability to pay, then, and even if you believe that opinion, then it is safer for you to include it. Why? Because the texts that support not including it are weaker, and the ones that say to include all gold and silver are stronger and more general. Okay, so we said if something is gold or silver or jewelry, or it is like gold or silver or jewelry, it is included. What does that mean? That means we're going to include the cash, and we'll do questions at the end. We're going to do cash that's in our sock drawer, right? And we're going to do cash that's in our banking account, correct? What if I have cash in my savings account? Still in your possession. What if I have cash in my brokerage account? Still in your possession. Any cash, anywhere, is going to be included, right? That's a very important point. Because sometimes you go, if it's in your banking account, and then we go, well, Joe said it was in our banking account, but not in our savings account, so I'm not going to include that. So we don't want to be literalists. Any cash anywhere, then you're going to, include it. Make sure my mic is... Okay. Any cash anywhere is going to be included. So this includes dollars, this includes gold, silver, this includes cryptocurrencies. Doesn't matter if you are holding it for the long term or they're not, or not. As long as it is considered to be a cash or like cash, then it is going to be included. Okay. What about stocks and funds that I invest in? Are they considered to be cash equivalents? Well, in a general business sense or accounting sense, yes, they're considered to be cash equivalents in that if I can sell them in the market today, they're liquid, and therefore I should be including them. But the question then becomes, well, if I invest in a stock, shouldn't I make a difference between what I trade in actively and what I actually hold for the long term. So if I, for example, go to the market and I find a number of, let's just say, hats being sold, and I buy those hats, and then I go to another part of the market and I set up a little stall and I start selling hats, and I make cash off of that. Then, do I pay zakat on that cash? Yes, I do, right? But what if I invested into a hat factory that doesn't have production yet? Am I going to pay zakat? Doesn't have production. But then when it starts producing inventory or makes cash from selling wholesale, then I would. So there's a difference between someone who is an active trader in a stock or in an asset and a person who invests in a company that produces something for the long term. So remember earlier when we talked about your hard assets or capital assets in a company are like your personal effects in your house. They are exempted. So in my home, I pay on the cash that I have in my sock drawer. In my business, I pay on the cash and the cash equivalents that I have in my business. How then do we determine what stocks that we're invested in have cash in them? Everybody here is familiar with buying and selling shares of a stock, how companies work. I'll give you an example. Let's say that you and I, so Aman and I were going to go into a partnership, okay? And we say, you know what, halal taco trucks. Everyone loves tacos, everyone loves halal. So halal taco trucks, gotta be a winner, right? So he puts up $20,000, I put up $20,000. We buy the truck and we hire somebody to run it. So now, the truck is worth how much? Remember, 20,000, 20,000. How much is the truck worth? $40,000. Now that we hired somebody to run it, let's say that we're making $1,000 a week, so $4,000 a month, and we're paying this person a salary of, let's say, $500 a week. So at the end of the month, how much money do we have left over? $2,000. Now, when the company's made $2,000 of net profit, he gets how much? $1,000, and I get $1,000. Okay. In business, in stock, now the company is the taco truck, and the business that's being done has created a dividend. It's created gains. That dividend is the cash that the company made through its business activities. But let's say that our taco truck became really popular. Now everybody wants to buy a truck, but the supply of trucks is low. So what happens to the price of current trucks? Goes up. So now instead of our truck being worth $40,000, it's worth $60,000. So if we sold our truck today, he would get how much? $30,000, and I would get $30,000. So I would get my basis of $20,000 and a $10,000 gain. That gain is not actual cash until you sell it. But in business, it's called capital gains. So it's the relative increase of the price of the company based upon supply and demand in the market. The income from the business is called dividends. So when I invest in a company, right, my money goes to buy assets and business activities. The assets are illiquid. They're the what generates the money. So if I owned an apartment building, I would pay on the rent that I make from the apartment building, not the building. If I owned if I was a shoemaker, then I would pay on the shoes that I make, not on the raw materials and the anvil and the hammer and the leather and all that kind of stuff. Similarly, if I own a share in a company, I will pay on the cash, receivables, and inventory that company has. I will not pay on the factory and the computers and the forklifts and the whatever. So again, hard assets and current assets, or capital assets and current assets. So if I'm a day trader or a swing trader in the market, my business is buying and selling, buying and selling, buying and selling. My business is arbitraging the difference between the stocks. I don't care if the company's going to make money year over year. I'm making money from the price going up and down, buying and selling. In that case, my inventory is the stocks and the cash that I have. So I treat it all as the same as cash. So if I'm a day trader or a swing trader, and I'll open up my Robinhood account, my Fidelity account, my Schwab account, my TD Ameritrade account, and I just look at the account total, same as cash, and then add that to my assets. But if I'm investing for my retirement, I'm not trying to make money off of it. I don't care if the stock goes up or down throughout the year, right? Because my mind is, I'm waiting for this company to gain steam over 10 years, 20 years, 30 years. And then I'm going to sell. And in the meantime, it's going to keep growing because it's making money, and I'll continue to add that, which is why when you invest over the long term in your investment account, you can actually select reinvest capital gains and dividends or have it paid out to you directly. So how then do we treat companies that we're long-term passive investors? This difference is mentioned by scholars of the past. يُفَرِّقُونَ بَيْنَ الْمُحْتَكِرِ وَالْمُدِيرِ. They make a difference between a person who is trading, actively dealing, and a person who is buying and holding. So if I buy and hold, then what am I going to do? Now, in my personal research, and I found of the American markets, of the S&P 500, and I found that this was reiterated by research done by the National Zakat Foundation of UK for UK markets, that the average company in the S&P 500 has current assets between 22.5 to 25% of their market value. Meaning if I bought a share in a company for $100, then $30 of that represents the cash, receivables, and inventory of the company, and $70 represents the buildings and furniture and forklifts and whatever else. So if I'm buying to become an investor in and a part owner of the company, then if I owned 100% of the business myself and I had $30 in cash, would I include it in my assets for paying zakat? Yes, I would. If I had $70 worth of equipment, would I include it? No, I wouldn't. So I treat my shares the same way. I would take 30% of the market value of the share, and then I multiply that by 2.5%. And when I refer to the 30% rule, this is what I'm talking about, right? So if I'm invested long-term buy and hold, passively in a company, I just put the money in and I let it sit there. I might add to it, but I'm not taking out, right? Then I look at the share price, I multiply the share price by 30, and then I multiply that amount by 2.5, and that's the amount that I have in zakat. And of course, by the number of shares that I owe. Now, why am I doing this? Again, because the current assets, which are the cash, receivables, and inventory, and if you have my book on zakat, I call this the CRI method. So the cash, receivables, inventory method. Again, if I owned a building, I wouldn't pay on the building, but I would pay on the cash and the inventory in that building. Similar for a company. So if I have a brokerage account that I can access at all times, I can sell at all times, but my intention is that I'm waiting for that company to increase because I'm an investor in the company and I want long-term growth, then I'm only going to pay on the cash, receivables, and inventory, or it's known as the current assets. Now, you can, because this usually is asked, you can go company by company and find out the current assets in every company and calculate exactly what the current assets are. You can do that. It's tedious. Therefore, the 30% rule. Why 30% when I said that current assets generally go between 22.5 to 25%? Because we add a little bit more for fluctuations in the market and for companies that sometimes, because of being multinationals and the way that they store their cash, they don't report in the same way that a company would report. So it's basically a safety measure. Okay, so that's if I have money in my brokerage account that I can access all the time. What if I'm investing in a 401k or an IRA or something like that? right? So if I'm a long-term passive investor, okay, then I can access this account without penalty. Then I use the following formula. We mentioned, it would be 0.075% of the total amount, or the total amount times 30 times 2.5%. It's the same exact calculation. The 30% rule is what I'm referring to here. Now, if I have a 401k or an IRA or 457B or a Roth or a traditional IRA or a pension or whatever it might be, now I have to ask a few other questions, because these accounts are tax advantaged. There are penalties for access, and there are also times when I can access it, right? So can I access the money without penalty? That's one question. Number two, am I in a long-term passive investment? Yes, I am. Am I cashing out, or am I keeping that money invested? So if I have a 401k and I take what's called a qualified distribution, then I now have cash in hand. That's different than keeping money long-term invested in the account. So how do I treat these accounts? So again, if I can access the money without penalty, is that possible with a 401k? No. Is it possible with a Roth IRA? Yes, it is. But only the contributions, not the gains. So I make a differentiation between the contributions and the gains. Is it possible with a traditional IRA? No, it's not. Is it possible with an HSA? Yes, it is. I can access an HSA at any time. I have to spend it through the HSA card, but I can access it, right? So the idea here is, through all of these accounts, we want to remain consistent. And through all the asset classes that we're talking about, we want to remain consistent. Whether I'm paying zakat on my apartment building that I rent out, or I'm paying zakat on the companies that I've invested in, I want to remain consistent with the rules. Okay, so because this is mentioned, I mentioned these opinions. I personally hold opinion number 3, but I will tell you these 3 opinions, and I think it's important that you understand why I choose number 3. The most popular opinion about what to do with your 401k or IRA or anything else is that you take the total of your 401k, you take the total of your 401k, you deduct the penalties, you deduct the taxes, and then you pay on the whole thing. Now, that sounds easy, does it not? It sounds quick, does it not? For any of us who are nearing retirement, is it that easy? It's not. Because at times, so when you're investing over the period of 40 to 50 years and you're in your 20s and you just started, you don't relatively have a lot of money in your 401k. And therefore, you have enough money from your paycheck to pay the zakat on money that you don't have access to. But if you have 20, 30, 40 years of compounding, and in fact, in the last 10 years of your retirement is really where you see the most accumulation. Sometimes the zakat would be more than a whole month's salary if you were to use this method. So I don't advocate for this method, and I'm telling it to you because it's popular, but it's wrong. And it's wrong for a number of reasons. It's wrong because it doesn't take into consideration the fact that this is a long-term passive investment, as we just talked about, remaining consistent across asset classes. It also doesn't take into consideration the differentiation between capital assets and current assets. It also doesn't take into consideration the idea that I don't have access to the money. Remember the land that we talked about earlier? I own the land, I own the well, I own the gold. Do I pay zakat on it? No, I don't. When? When I get it. How? That's another story. But all scholars are of agreement that if I don't have access to it, then I don't pay zakat on it. So while this is a popular opinion, I do have to clarify that I personally believe this opinion is wrong, and I have not seen anyone convincingly defend this opinion. It's simply just a popular opinion. The second opinion says, I'm not going to make a difference between long-term passive investments in tax incentivized accounts and non-tax incentivized accounts. I'm going to treat my brokerage account the same way I'm going to treat my 401k. Because I own the 401k and I can get it out. This is the logic of that. So they say don't deduct taxes, don't deduct penalties, but simply use the 30% rule across the board for all long-term passive investments. This is a better opinion, I believe, than the first one, but it is still not as strong, in my opinion. And the reason being is that it does not take into consideration the concept of access, right? And that is, again, I own the land, I own the well, I own the gold. Do I pay zakat on it? No, I don't. The gold relative to the market is growing in value, is it not? Remember, we're traveling back in time to the 1800s. It's growing in value, but I'm not actively benefiting from that value until I receive the gold. So therefore, number 3 says, if I have a 401k, or a traditional IRA, or a 403b, or a 457, or a pension, or a TIA CREF account, okay, which is like a government 401k, I don't have access to any of this money, or I have gains on my Roth IRA, then I don't pay on it until one of two things happens. I either actually pull money out through a qualified distribution, which in that case, I'll pay no penalty, but I'll pay taxes when I pull it out, and then I have cash in hand. And what do we do with cash when we have cash in our hand? We pay zakat on it, right? Or I'll wait until retirement. Then, if I get to retirement, one of two things is going to happen. So now we're at 3B here on the slide. So now that I have my 401k that I haven't paid on for years, and then I get to retirement, one of two things is going to happen. I'm either going to cash out of my retirement, cash out of my 401k completely. You might say to yourself, why would I cash out of my 401k completely? I might want to pay off my house. I might want to buy extra properties and just live off of the rent. I might want to start a business. Lots of reasons that you could do that. So if you receive that lump sum as cash, then you pay 2.5% when you receive it. Why do I do that?
Minus taxes?
No, when you receive it, not minus taxes. So because you're essentially the sales price. Yeah. Why? Because all of those years that passed, I've essentially not paid anything on it. So to then minus the penalties and the taxes and anything else would kind of be double dipping. So we're going to pay 2.5%. Essentially, we're going to consider all of the time from the time the money went into the account until the time that the money was taken out of the account to be one time period, like 1 year. And I'm going to pay zakat at that time. So there's 3 approaches to our gold at the bottom of the well in our land example. These are classical opinions, right? So somebody said to me one time, I taught this in Dallas years ago. Somebody said to me one time, but what does Abu Hanifa say about 401k? And I said, well, Abu Hanifa had an IRA. So, in reality, these things didn't exist at that time, but the fundamentals did, right? So, there are 3 opinions about what to do with that gold when you get it at the bottom of the well. One group of scholars, namely the Shafi'is and some Hanbalis, they said, pay zakat for 2.5% for every single year that you didn't pay zakat. The second opinion said, that was over here. The second opinion on this side said, get the money, hold it for a year, then pay zakat on the money. So it's almost as if it's new money for you. This is the opinion of Abu Hanifa. The middle opinion is the Maliki school and some Hanbalis that said that when you receive it, consider all the time that passed to be like 1 year and pay as soon as you receive it, then pay on every year thereafter. I consider this to be the middle of the middle ground opinion and a good balance between the two. You're not denying the fact that you've gained so much over all of those years, right? And you're also recognizing that you now have access to that money and you'll pay it over time. Some of you might say, I'm not sure what to do. I mean, if you're asking me, I'm obviously going to tell you to follow my opinion. Because I've researched through it and I'm confident in my opinion, and that's my role if I'm answering a question for you, is that I would take responsibility for answering that question. But if you feel confident in another approach, and you've asked someone, or you've researched it and you've asked someone that you trust, then follow that opinion, right? These are all approximations. When scholars differ over these issues, are they differing over them because the texts of Islam don't address them? No, because the texts of Islam have enough flexibility for variance of opinion that allows people the ability to make different choices, right? The intent behind all of these opinions is to please Allah. And some of them say, well, no, I'm going to please Allah for every single year that passed. And others said, no, we're going to please Allah in recognizing the gains by not paying or not deducting the expenses, and then paying every year after. And they said, no, I'm going to please Allah through treating this as new wealth I've received and then paying after a year. So, in summary, on your 401k, if you're asking me, on your 401k, because you do not have access to this money, you cannot spend it, invest it, or give it without penalty, because you would be breaking your investment contract that you have with your fund manager, which is one of the reasons why you pay a penalty, because the government wants you to keep that money invested. And why do you, when you take a personal loan from your 401k, pay interest back into the 401k? Is it haram? What would you say? Interest on your 401k loan, is it haram? Don't think why not. MashaAllah, he's so muttaqi, he's like, my lip isn't even gonna crack open. I'm not even gonna allow myself to say anything, MashaAllah. Exactly. And there's an agreement between scholars that it's impossible to pay riba to yourself. If I take $5 out of my right pocket and I put $6 in my left pocket, have I paid riba to myself? No. Right? So you're exactly right. The question, I want you to think about the reason why they would want you to pay back with interest. Because they want to make sure that you are keeping up with growth in your account so that you have money to retire, and so that your fund manager is also not disenfranchised by you constantly taking money out while he's trying to invest it and make money. If you were running a business and you took money into that business and you said, okay, every partner is going to put in $10,000, there's 10 of us, we're going to take $100,000 and create a business. Let's say we're going to open up a couple of taco trucks. And then 2 weeks after I give you my $10,000, I go, my miskeen, I need some money back because, my son just had a child and I need to do aqiqah, And you're like, what? No, we have a lockup period of a year. You can't get the 10,000 back for another year. This happens a lot with Muslims in business. And I'm drawing attention to this specifically because if you're going to go into business, understand what you're doing first, right? It does not function the same as a bank account. And investing in a business is a long-term commitment. If you want to invest in a long-term commitment where you can get the money out and sell it, then you would have to do so through the stock market because that's liquid, right? My point being here is that if you're asking me on your 401k, your 457b, your 403b, your Roth IRA gains, not the contributions, you do not pay on those. Your traditional IRA account in its entirety, you do not pay zakat on those until you either take money out before retirement or you reach retirement. If you reach retirement, then if you take a lump sum, you pay on the whole thing. If you keep it invested, either in the same 401k account or you roll it over to a traditional IRA and keep it invested, then you pay on the 30%. You use the 30% rule that we talked about. We said you take the market value times 30% times 2.5%, which is the same as the market value times 0.075%. Right? And then you do this once again every year after you access it.
I have a quick question. So the second theory that you had said where
No, you'd pay on it when you pull it out. Yeah, the 20K that you received.
Even if you're holding it for a year and you used it in that year?
Yes, yeah. Okay, now remaining consistent on this, let's talk about real estate and rental income. And this, again, this has to do with the type of property and the intention behind that property. So if I own, if my property is my residence, then I do not pay the zakat on my residence because my personal property and effects are exempted. If I rent out this property, what do I pay on?
Income.
I pay on income from the property, not on the value of the property, even if the property sees appreciation. Somebody says, aren't I cheating zakat? No, you're not. Why? Because if I sell the property later on, what am I going to do? I'm going to end up paying zakat on that money in some way, shape, or form. Whether I roll it over into another property or I simply take cash out. The idea behind zakat, again, is what? To encourage people to spend, give, and invest. 2.5% is to prevent people from hoarding. If the property is active on the market, let's say, for example, I am a real estate broker and I have a number of properties that I own and I have put on the market for sale, then my business is what? Selling homes, and I'm not an agent. This is not where I'm selling for someone else. So I own the home, titled to me, and I put them on the market, then that's my inventory. And then I will pay on that inventory. What if, and this is more common than any of these other ones, what if I buy a property because I have some extra money, I don't really know what I'm going to do with it. I say to myself, if I get more money later in life, I might build a home. Or if one of my children needs a home, I might build a home for them on that. Or if it goes up later on, I'll sell it and I'll take the money and use it for something else. Or I might just keep it. How do I treat it? Essentially, you don't know the value of that land until you sell it. And you don't have a purpose for that land until you decide to sell it. So we're going to treat that like illiquid wealth. We don't know the value of it until we've actually sold. And so we pay 2.5% on the sales price, just like the 2.5% on the 401k that's been sitting all of that time. We're not going to deduct taxes and expenses. We just pay on the sales price. Question: what if I put seed capital, or I'm an angel investor or venture capital into a company that does not have revenue? Do I pay zakat on that money? No. Why not? It's not making anything, and I don't know the value of my investment until one of two things happens. The company goes public or it liquidates. Meaning that it's converted into shares and sold in the market, or it sells the company to other investors, or it closes and sells all of the assets. So again, consistency across asset classes. So therefore, when I sell, I treat it just like the 401k, just like the property that didn't have any purpose behind it. I 2.5% of the sales price at that time. Okay, debt that I can collect on. We said before that there is good debt and there is bad debt. Good debt is you lend your brother $500, and when he wants to give it, he wants to give it to you, you say, just keep it for now. Do I pay zakat on that? Yes, I do, because I can collect it. If I can collect it and I have access to it, then I add this to my assets. If I lend someone $500 and I say, hey man, you remember the $500 I lent you? And he says, I don't know what you're talking about. Then you don't include this. Or he says, I'm really sorry, I know I owe you the money, but I can't pay right now, I'm having financial difficulty. You don't owe it. You don't add it to your assets for zakat. What if he says, I know that I owe you that $500, but our agreement was that I have to pay you in 3 months, not now. What do we follow? The agreement, because we agree that he's not going to pay, so therefore it's not yet due. So the idea is you pay on debts that are due and can be collected. Right? Now, zakat on inventory, business inventory. You should have had that inventory for a year. You might say, but I'm always moving inventory. How would I have inventory for a year? In that case, you won't pay on it. You're going to be paying on the cash, right? And then the value of any leftover inventory. It's not under contract. If you deal in inventory, let's say, for example, you're a used tire dealer, right? And every year, or every month, sorry, you're buying tons of used tires, testing them, and then you have a contract with some tire shop that every month you're going to be sending them 100 tires. Then you would exclude what you have a contract on, because those are actually not owned by you. You don't want to pay twice, because you're getting cash from the tire shop for those tires. So you'll exclude those tires. And you've designated that inventory for sale. This is not bad inventory or inventory that has been deprecated and marked down. So let's say, for example, you're in business and you created a product and it never moved in the market. You can't sell it. It's not worth anything. Nobody will buy it. It's literally just sitting there as an expense, taking up space in your warehouse. What do? Well, it's not on the market, and you won't know the price of it until you actually sell it. So what do? 2.5% on the sales price after you've sold it, even if it sits there for years. Why? Consistency. So if it's illiquid, and you can't sell it, then you treat it like an illiquid asset. Again, you don't include, if you have inventory, you don't include your business domicile, your equipment, or similar. You don't include inventory that's under contract. And also, how do you price inventory that you're selling? Do you use the retail price or the wholesale price? I used to say, and I'll say this publicly, I used to say retail price. If you sell retail, wholesale price if you sell wholesale. But I've recently changed my opinion and say across the board, you use the wholesale price, because you bought it for a certain expense and you're not expected to pay on unrealized gains and profits, which is essentially what the market price is. Right? Okay, Jabir ibn Abdullah radiallahu anhu, he said, what a great help money is for gaining taqwa. We many times we think about our our taqwa as being something unrelated to our money. When in reality, money can be an extremely beneficial source for becoming muttaqi. It's mentioned that one of the great imams of the Salaf, Sufyan, rahimahullah ta'ala, he was teaching his students and he was telling them about zuhd, asceticism, and giving up the dunya. And after they sat with him in the mosque all day and learning about giving up the worldly life, they went to the marketplace and they found him doing business. He said, aren't you our teacher who just told us to give up the worldly life, and we find you in the marketplace doing business? And he said, yes, but this wealth helps me to stay away from the dunya. If it weren't for these dirhams, if it weren't for these silver coins that I make here, لَتَمَنْدَلَ بِيَ السَّلَاطِينَ, then the rulers would wipe their hands with me. He didn't want to become under someone else's thumb and have to take a stipend from them, like the ruling class, so he did business. Because business gave him the independence to be an independent scholar. Right? So, making money and doing business is something which can benefit you on the Day of Judgment. The Prophet ﷺ said, Ya ma'shar al-tujjar, he called on all merchants and business people. Ya ma'shar al-tujjar, inna al-tujjara hum al-fujjar yawm al-qiyamah, or hum al-fujjar yawm al-qiyamah. He said, O gathering of merchants, indeed, a gathering of business people are sinners on the Day of Judgment. Illa man barra wattaqa wa sadaq, except those who are righteous and have taqwa and are truthful. Right? So the idea of transparency, of truthfulness, of righteousness is what we should be striving for with our money. And when we do that, then our money becomes a source of taqwa, not a source of worry for us on the Day of Judgment. So we're going to break for questions. It's 12:40. This clock is correct?
Yeah.
Okay, it's 12:45. And then, correct me if I'm wrong, from 1 to 1:30 is lunch? Okay, so 1 to 2, you have anything you want to do between 1 to 2, you know, lunch, sleep, eating your sleep, whatever you want to do. But we're going to take, we'll take the next 15 minutes to answer questions, and then when we come back, we're going to talk about haram earnings, inshallah ta'ala. Yes?
What is the taxes and penalty on withdrawing 401k?
Taxes and penalties, so there is a flat 10% penalty on withdrawing from the 401k, and then whatever your tax bracket is at that time, so let's say for example if you're in the 22% tax bracket, then you would pay 22% of taxes on that as well.
So 32%.
Yeah, effectively, yeah. But they'll calculate it for you before you make the withdrawal, and they'll tell you what it is.
So we just call the 401k and give it back.
Yeah, exactly. Call the 401k and say, hey, I want to make a distribution. I want to ask them, number one, I want to make sure, is this a qualified or unqualified distribution? A qualified distribution means you pay the tax but not the penalty. So qualified distributions, there are 7 types according to the IRS. The 3 top are first-time home buyer, medical expenses, educational expenses. And then the other 4, I don't recall what they are right now, but they're in the similar vein.
I'm doing it for Zakat purposes.
Oh, if you want to do it for Zakat purposes, then that would be an unqualified expense, and you would still have to pay the penalty and the taxes. Yeah.
I thought the penalty is 20%, I think.
10%, yeah. 10% plus taxes. So if you're at a low tax bracket, the idea is that if you can wait to pay taxes on all of that money until you're retired and you now are not earning, then your tax bracket is lower, and thus you pay lower. Yes.
If your retirement is, let's say, 67 years old, you are qualified for retirement.
Yes.
But you take retirement at 62.
Mm.
So is that also considered?
If you're given full access, the question was if you retirement age is 67, but you take early retirement at 62, do you still pay zakat on that? The question is, do they give you access to that or to that account or not? If they don't give you access, then it has to do with access to the account.
So if you take monthly deduct payments after your qualified retirement,
But you don't have full access to the account, then you only pay on what you receive.
and you collect, let's say, $2,000 every month after your retirement, end of the year you pay on $24,000 or you pay every month on $2,000?
If you're receiving it out of the account every month, the easiest thing is to just pay 2.5% of that when you receive it. Yeah, so it would be like a monthly charity. Now, one thing I do want to mention about retirement, it's very important to remember that if you're paying zakat from retirement, you do have the option to pay zakat, to pay charity directly from your retirement accounts to a 501c3 charity. And that means that your earned income is lower. So if you find yourself wanting to pay zakat and also not wanting to take it in as income and then pay zakat on it, then you can simply calculate the zakat, tell the fund manager, I want to pay this much in charity to this charity, give them the EIN number, and they'll send a check directly to the charity. That way, the money that you take into your account is lower, and then you pay less taxes.
You can do that at the time of taxes. Similarly.
I don't know. At the time of taxes, I'm not sure.
So, like, I'm retired,
Mm.
eligible to withdraw anytime, but for the last couple of years, I'm just doing it R&D, right?
Yeah, required minimum distributions.
Yeah, I
Yeah.
set that up together in December or November or whatever, and then that becomes part of my income for that year.
Yes.
And I'm paying zakat and everything.
Yeah.
Like that.
So if you're taking a required minimum distribution, then I would simply just talk to the account manager and say, look, there's an amount that I want to pay, and that amount will come out of the account directly and go directly to the charity, and therefore it wouldn't affect your RMD, but it would affect your earned income for the year would be less, and therefore you pay less taxes.
Pay out of the RMD.
Exactly.
The amount of money.
Exactly. Yeah. So just talk to like if you have a fund manager, or let's say for example like a CPA that helps arrange that, and they'll make sure that it's done. All the technicalities are taken care of. Yeah. But it will help to reduce the amount of taxes. Yeah. Yes.
Question on money. Can you claim business expense for tax purposes if you pay the zakat on inventory or other business stuff? Does that happen?
Oh, that's a great question, and that we'll actually have another section about liabilities and taxes. But yes, you can claim tax deductions, whether it is for personal taxes or business taxes, and get that money back. And the reason being is that when you claim a tax deduction, you are not actually taking money from your charity that you gave. You're getting money back that the government took from you before you paid the charity. So what happens is when you pay your business taxes, you generally pay them quarterly. And so you're estimating how much you owe, and then you send it to the government, and then at the end of the year you file your taxes, and then they square everything up and they'll give you some back, or they'll keep some depending upon earnings. Personal taxes we generally would do once a year, and the government will take from every paycheck estimated taxes. And then why do we get a tax return? Because they took more than they were supposed to. Now, what happens when I take a tax deductible expense? All right, let's say for example I gave charity to Hamd Institute this year. Okay, so I gave $1,000. But let's say for example that the government had taken $1,000 in taxes. When I take a tax deductible receipt from Hamd and I file my taxes, am I getting the same zakat or sadaqah back? No. That's actually two separate amounts of money. The entirety of the $1,000 went to Hamd. Right? Now the government's saying, oh, we noticed that you did something with your money, and therefore we're willing to give you up to 60% back of the money that we took from you. They won't give you all of it back, but they'll give you some of it back based upon your tax bracket and how much you owe and a lot of that, but generally up to about 60%. So you could get up to $600 of the original $1,000 that they took from you, but that's not the same $1,000 that you gave to Hamd. Right? So do you want to take tax deductions? Yes, you do. Why? Because you get to keep more of your freestanding halal earned income instead of allowing it to go to the government.
Yeah, Sheikh, I have a question.
Please.
Regarding your point of at the time of paying zakat, you have to give one installment. You have to deduct one installment of your mortgage, one installment of your.
Yes, if it's due. If it's due.
Can you explain that concept again? Because we usually give zakat after 1 year or around Ramadan time.
Mhm.
But does that mean whatever my zakat value is coming, I have to minus that month's expenses?
Sure, so we'll have a whole section about that, but in brief, if I pay my zakat on the 1st of Ramadan, for example, and the 1st of Ramadan is going to be when? Monday, let's just say Monday. Okay, what's Monday in the Gregorian calendar? The 11th, okay? But let's say, for example, that I don't pay my electricity bill until the 15th. Do I deduct my electricity bill? No, I don't, because it's not due. But let's say, for example, that I have not paid my rent yet, and I'm supposed to pay my rent before the 10th. Do I deduct my rent? Yes, I do, because it's currently due. So I only deduct those expenses that are currently due before paying my zakat, not the ones that are due after the zakat is usually paid. Does someone over here have a question? Yes, please.
So I'm a bit confused by, so for buildings, for example, that we own that we're not using,
Mm-hmm.
versus like jewelry that we also own, that technically, is there.
Mm-hmm.
Why do we pay zakat on the jewelry, but we're not paying zakat on
The building or the land.
until or sell it?
Yeah, that's a great question. So the building and the land are generally illiquid. You won't know the price of them until you sell it. because the price is highly subjective and there's not an active market for those things. Whereas the jewelry is gold and silver, it would be the same as if you were holding gold coins. Those gold coins would be due on Zakat because they're considered holding value and are of currency. So the jewelry is closer to being like the coins than it is to being like the illiquid land. Now, the scholars that exempted personal gold and jewelry that someone wears said, well, we see that, but we see that the jewelry that a woman wears constantly is more like her couch and her dinner table than it is like a coin that she's trying to save for its value. And therefore, you have those two opinions that exist.
But can't I get the market value? Like, can't I have the control?
You can, but when we say liquid, you would have to go through a process in order to have it appraised, find a buyer, and then sell it. Whereas gold and silver, you can pretty much go anywhere and find someone to buy it immediately. That's the difference there. Yeah. And the second question?
I probably missed it, but so for if I'm like active in the stock market,
Yes.
how do I put my Zakat? Do I just like collect everything and do like it's 2.5%? If it's not a long-term investment, it's like
Day trading, swing trading. Yeah, so if you're a day trader or a swing trader, you just look at the value of your brokerage account and multiply it by 2.5%. Same as cash. Yeah. You're welcome. Yes.
okay, so if your parents don't have any income and you support all of their expenses, like you pay them as dependents,
Yes.
but your like let's suppose your mother has gold jewelry, like then do you pay Zakat on her jewelry?
That's a great question. So if you have a dependent who owns jewelry, does not have cash of their own, but that gold jewelry is above the Nisab, do they owe Zakat on it? Yes, they do. Can you pay Zakat on behalf of someone else? Yes, you can. So this happens a lot with someone who's supporting their parents, or let's say, for example, if a man is working and his wife is a stay-at-home mom, then she might have gold jewelry and she doesn't have liquid cash in order to pay. So if another person pays on their behalf with the intention of taking care of that obligation, it's completely allowed. Otherwise, if a person has something that Zakat is due on and doesn't pay, then they owe that until they can pay. Meaning that I have 85, I'll say I have 100 grams of gold at home, but I don't have any cash from other sources that I can pay Zakat on that gold for. I owe Zakat, but I don't have cash to pay it. So the obligation to pay remains. It's not because I can sell the gold. But if I'm saying I'm not going to sell the gold, then I still owe the Zakat for that year. So I calculate it, I record it, and then I say, okay, as soon as I get the cash, then I'm going to pay it. But the obligation is not negated simply because I don't want to sell the gold. So I'm either going to sell the gold, or I'm going to wait until I get cash and pay it, or someone else is going to pay that for me. And I think if a man has his wife is a stay-at-home mom and has that gold, then it's a form of ihsan for him to pay it for her. If a child is supporting their parents and they have that, it's a form of ihsan to pay it for them. But that doesn't negate the personal obligation they have until it's paid. Mm-hmm. Yeah. Personal responsibility for actions in Islam is not negated because you're a parent or a child, because you're a husband or a wife, because of you're working or not working. It's based upon the conditions applying or not, right? So the parents are still responsible for that. If somebody fulfills that responsibility for them, that's acceptable. But they're not exempted from the responsibility just because they don't feel like doing it, or they don't want to sell what they have. Yeah.
I guess might as well just sell a portion out of that and pay the Zakat.
Sure, you could do that as well. And another thing as well is that if you have, and this is another issue that comes up later, is if you have a known amount of money coming in every year, or you have a known amount of wealth that you're holding in savings, and you want to prepay for a couple of years, let's say, for example, I say, I've got 100 grams of gold, I know it's this much, right? And I don't have any other money that's coming in, I just have this, and I have enough cash right now to pay ahead for 2-3 years. Now you just pay for making the intention that you're paying for 2-3 years, and you're done. You've met your obligation for that time. So she had a question.
Let me get my train of thought.
Sure, not a problem.
Yeah, I think this, sorry.
Yes, please.
I just want to add to the sister what she was saying.
Sure.
You think conversely, like, I have daughter,
Mhm.
I bought jewelry for her.
Sure.
She's not earning, but I'm paying Zakat of that.
Yes.
Because she's part of my responsibility.
Yeah.
So parents are your responsibility. If they are unable to and you're in a position, this is my position.
No, that's the correct position. Same with minor children. If you have a minor child, your child owns property. That is valid for them to own property. If that property is liable for zakat, they're to pay zakat. If they don't know how or are too young to know that, you as their guardian have to pay for them. Was there something you wanted to add?
Just to follow.
Sure. That would be the last one, and then we'll break for.
Okay, not a follow-up question, but another question. So let's suppose someone has property in another country
Mhm.
that they cannot, like, that they don't have access to.
Sure.
Or liquid assets that they cannot take out of the country, but that they're living in the country, and where they don't have an active income, right?
Okay.
So is it permissible to hold paying off the zakat until you are in that country and you have access to it, pay on the liquid assets in that country?
So if you have, if the asset is liquid in the country where it's being held, but you can't reach the asset in order to pay, and you know how much it is, then yes, calculate the zakat for that. If it's due every year, calculate the zakat for that, and then pay it when you reach. Or have someone pay it for you that's there in that country. But if you can't, then you can do the first thing. There's a couple of moving parts there, so I hope I got it all.
Yeah, so you're not held accountable for not paying the zakat until you're able to reach your account.
Yeah, because you're precluded from reaching it, even though it is yours and it can be paid, right? So if you held off simply by waiting to get to it and then paid, even at that time, one time without deducting any expenses or anything like that, that would be valid as well. Okay, so essentially treating it as illiquid because you're unable to access it. That access could be because you can't get into the account. That access could be because you can't get into the country where it is, or no one else can for you. But my encouragement would be to try and find somebody who can get that for you, before you before you give up. Yes.
Are you required to pay zakat on the same Islamic date every single year?
So let's defer that because we will talk about that. We have a specific slide about that, right? About when we have a number of different streams of income and how do we choose the date. So we have a specific slide that addresses that. So we're going to break now. Inshallah, we will reconvene. Let's go over the amount of the amounts. Times again.
We break right now in 2 o'clock to go. So around 2:20.
Okay, so we're going to reconvene here at 2:20 to continue class. From now until then, you've got free reign for, lunch, wudu, salah, and then we'll see everyone at 2:15, 2:20, inshallah. Please, if you can make it 2:15, even better. But if let's say a hard stop on the break and a start at 2:20. At the masjid.